Although the Dow was down 100 points today, you can see where it opened, where it traded to, and then where it closed. It closed above where it opened, which told you there were still buyers in this market, even though they sold it off pretty strong. Also gave some evidence that this level right here is probably a support level. This is a resistance level of this trend channel. And because of the clarity that the graphics, the candlesticks provide, notice what happened in the NASDAQ today. They opened it lower, right here on the T-line. But at the end of the day, they brought it right back up to where it was trading relatively flat on the day, which told you the buyers are still there. Even though it traded flat, they were buying during the day. So this type of information allows investors to make much more accurate assessments of what's happening in a price trend. Tesla is a good example of patterns, recognitions, and fulfillments. Notice the trend kicker. Tesla opened here, closed here. The next day they gapped it up and took it in the opposite direction. That alone, a kicker signal, tells you there's probably more upside. The fact that it also came out of a fry pan bottom, which is a recognizable candlestick pattern, that tells you investor sentiment was building up. And now how long do you hold on to this position? Until you see a sell signal and a close below the T-line, or with the caveat that you see a sell signal when you've moved very far away from the T-line. Whether you're a stock trader or an option trader, when you can see a pattern, fry pan bottom, a J-hook, and that it has broken through relevant resistance levels, it allows an investor to make a much more concise entry strategy, knowing that if this is a breakout of a fry pan bottom, there's going to be more upside. So you can be buying immediately on positive trading without having to wait during all this time frame. Even though this would be a good profitable trade, your ultimate entry is on positive trading, breaking out through this level, coming out of a big pattern. So candlestick signals not only tell you which direction a trend is going, you can also utilize what everybody else is watching, such as in our shorting soybeans. Notice where the bearish engulfing signal occurred, right smack dab on the 50-day moving average, which had shown that it was a resistance level before. Then there was a next target, which would probably be right here, a support level. The fact that there was no buy signals at that level told you your downtrend was breaching this level, and you probably had a lot more downside. That same scenario can be utilized in what the Japanese rice traders call the three mountaintops. The Western terminology is the head and shoulders pattern. So we can see that the downtrend started based upon this large bearish harami closing below the T-line and not supporting at the 50-day moving average and or this level, telling us our next potential target is probably down here toward the 200-day moving average. Or if it doesn't support there, you could have another big move to the downside. Candlestick patterns are very identifiable. The opposite of a fry pan bottom is a dumpling top, a slow curving top. We shorted Lynette, LCI, on weaker open today because that would have told us the dumpling top was confirming there was probably a lot more downside. First target probably right in this area. Second target could be down here at this area. Essentially, signals and patterns developed by human nature over the last 400 years are going to still work for the next 400 years. The most consistent indicator in investment technical analysis is human nature. That'll be it. We'll see you in the chat rooms.